What happens when a billion-rand investment of public money just disappears? Well, that's exactly what happened in South Africa's poultry industry. We're going to break down how it all went so wrong, who's on the hook, and what this means for thousands of people whose jobs are now hanging in the balance. Let's dive in.
Okay, let's start with the number at the heart of this entire story, 1.7 billion rand. That is a massive amount of money. Over the last decade, that's how much public pension money got poured into one single company. And today, that entire investment, every single rand managed by South Africa's state pension fund, has been completely wiped out. It's just gone. So you have to ask, how on earth does an investment that big just vanish into thin air? To really understand this billion-rand collapse, we first need to get to know the key players involved. So the main player here is the Public Investment Corporation. You'll hear it called the PIC. Now, these guys are the largest fund manager in all of Africa, handling a truly mind-boggling 3.7 times trillion rand. And you've got to understand, this isn't just Wall Street money. This is the pension fund for South Africa's public workers. We're talking teachers, nurses, civil servants. So the PIC has this huge responsibility to millions of ordinary people. And that's exactly why the PIC is now in this desperate situation, trying to sell off its majority stake in a poultry producer called Daybreak Foods. See, after a decade of pumping money into it, the company is just riddled with losses and some pretty spectacular governance failures. Their only option left is a formal business rescue, which is basically a last-ditch effort to save the company from going under completely. But here's the thing, this was never the plan, not even close. A decade ago, the vision for this investment was bright and ambitious. Let's just take a look at the massive gap between that original promise and the grim reality of today. I mean, the difference here is just staggering. A decade ago, this was supposed to be a flagship empowerment project, something that would deliver strong financial returns and create sustainable growth. Fast forward to today, and the reality is a total disaster. Scandal, huge financial losses, allegations of mismanagement, and now a formal business rescue. It seems like every single promise was broken. The PIC chairman, David Masando, he said something that I think sums up the whole mess perfectly. He said, "We've got to exit it because we became a 100% shareholder by default." That little phrase, by default, it says everything, doesn't it? They never actually wanted to run the company. They were just forced to take it over as it was failing. And now they're searching for an operational strategic equity partner, or in plain English, someone who actually knows how to run a chicken business. So all of this leads us to the final, desperate stage of this crisis, the business rescue mission. So what does that actually mean, and what's being done right now to try and salvage whatever is left? Okay, so a business rescue is basically a formal legal timeout. It's a process in South Africa that lets a company in deep trouble, like Daybreak, hit the pause button. It gives them a temporary shield from all the people they owe money to. This buys them some breathing room to try and reorganize, restructure, and hopefully, just hopefully, avoid a complete collapse. So here's the roadmap they've laid out to find a new owner. The clock really started ticking in June of 2025. After an initial call for interested buyers, the final binding offers are expected to land by December. And the big target is to get a sale finalized by the middle of 2026. It's a very structured but very desperate race against time. And we can't forget, beyond all the spreadsheets and balance sheets, there is a very real human cost to all of this. We are talking about 3,000 jobs on the line. The livelihoods of 3,000 people and their families are now hanging in the balance, and it all depends on whether this rescue mission actually works. So let's zoom out for a second. Beyond just this one company, what is the wider fallout from the Daybreak collapse? What are the bigger, broader implications here? I mean, a billion-rand collapse of public money like this, it raises some really serious questions about how that money is managed and invested. So what are the key takeaways from this whole mess? Well, the implications are actually massive. First, it completely exposes the huge risks involved when state-run institutions try to invest in complex, hands-on industries like food production. It really shows that a massive pension fund isn't built to be a day-to-day operator. That's just not their skill set. This whole thing also shines a harsh light on some major weaknesses in governance, and frankly, it creates a ton of uncertainty for the entire poultry industry in South Africa. When you boil it all down, I think the biggest lesson is this. You can't just throw a giant pile of money at a problem and expect it to work, especially not in a complicated business like this. Capital, by itself, is never enough. You know, this entire story can really be summed up in this one powerful sentence. Capital without operational accountability produces neither transformation objectives nor investment returns. It's just a stark, painful reminder that good intentions and deep pockets mean absolutely nothing without smart, solid management on the ground. A very hard-learned billion rand lesson.